Good evening, everyone. This is John Locke, and welcome to the Locke in Your Success Trade and Market Update for August 11th, 2013. Before we get going, we would like to remind you to review our SMB training disclaimer, and also that any information contained in this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, any trades and/or results covered in this presentation may or may not be live trades. In the event they are computer simulated trades, we do the best we can to make sure they are accurately represented, and that the risk of loss in trading securities, options, and futures can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on SMB or YouTube, please be sure to visit our trading blog at www.lockeinyoursuccess.com and join our mailing list. And be sure to stay tuned for all the great programs we have coming out. All right, let's take a look at the markets. If we take a look at the Russell, and you remember last week we were expecting the sideways move and basically stay in this range. While we did pop above it a little bit on Monday, which again we were expecting, the market did remain in a nice tight sideways range for the week, which is really nice coming into expiration. If we take a look at the SPX, we had pretty much the same thing. We had a touch higher, and then this trend line I drew in here actually failed. If you remember, for the last 2 weeks, I did say I was expecting this trend line to fail and for us to close somewhere under this trend line, probably underneath this resistance level here. And as of right now, we're under it. Whether we're going to stay under it or not, who knows? But it looks like we're going to at least stay above or underneath this rising diagonal trend line. If we take a look at the NASDAQ, I did expect the NASDAQ actually to fail this point and come down to the 3,000 level. It didn't quite do that. It was a little stronger than we thought. It bounced and went higher. And then for the week, it went sideways as we were expecting as well. And last but not least is the Dow. The Dow had basically a falling week. It's actually kind of bearish for the Dow, and at least tagged under our support level for a little while, but closed above it. So in a nutshell, it's basically an in-range sideways week, which is pretty much what we were expecting. If we come back to the Russell, where does it go from here? Basically, what I'm anticipating is for this trend line here to fail, for us to come down to the 1020 area and then rally up hard after that, possibly drop even a little bit further to the 1010 or the very lowest 1000, but more likely dropping to the 10-10-20 area and then rallying up. There is a possibility we remain sideways, which would be my secondary scenario for the week. And the last scenario would be just a grind up. If this tries to hold this trend line, we may grind a little higher. The good part is if we put a 60-day, 60-minute chart up here, you can see a nice head and shoulders pattern, topping pattern forming here. We can set some nice price targets at 1020 and 1085. So if we do break out higher than the head of this head and shoulders pattern here, you're looking at a target of 1085. If we break down under, we're looking at a target of 1020. And if we do neither, then we're just, maybe we may maintain sideways, but I would not expect us to stay in this very tight range too much longer. We may hold it another week, and that wouldn't be a surprise, especially coming into expiration. We've been having fairly bullish action coming into expiration most of the year. So if we do hold this trend line into expiration and close right at the 1060, then we're going to have to be on a wait and see thing what happens the following week. It's not going to tell us a whole lot. And if we do fail this 1040 or 1038 bottom, then we're probably looking at something a little bit deeper here. And of course, if we break higher, we're probably looking at something around 1085. So that's in a nutshell what I'm expecting, and what I'm expecting if either side breaks, where I think the market's going. In general, sideways to bearish for the week. Let's take a look at our positions. If we take a look at the August V Condor, we see that there were no adjustments at all for the week. If we take a look at the analyzed graph, we're just sitting here waiting for this thing to expire. We are very likely to get about a $2,700 profit out of this. We're just in a regular condor at this point. we'd have to have some serious moves to have an issue on either side of this. Even if we broke all the way down to the 1020 level this week, we would still be fine. And if we broke all the way to 1085, we'd still be fine. Of course, you'd be drawing down some on your way there, but the chances of this running into any trouble would be very slim, and it looks good for coming into the close. If we take a look at our V condor for September, because we didn't get any market movement, I did actually make an adjustment to that. And the adjustment was very simple. It was nothing but to move out our straddle. What had happened is the market has just been sitting here at a low point. If we scoot back to Monday, which was pretty much the high of this run here, you can see that the V here is pretty low. Our theta is going to be fairly low on this level, and if the market had crept up, then that would be nice for this position. But what happens sometimes, it's kind of rare, but what does happen sometimes is the market comes down and it kind of hangs around this level here at the bottom of the V. And when it does that, what we start doing is we start widening this thing out. So what I did is I bought back my 1040 call and put. I'm sorry, I sold my 1040 call and put, and I bought a 1080 call, and I bought a 1000 put. And when you see that on the analyzed graph on Friday, this is here is what the position looks like. And we still have a really wide range of movement before we run into too much trouble. If the market continues to sit here, we'll continue to widen this out, see if we can take in maybe a little bit more. As it sits now, we have a potential of about $3,400, which, like I said, is a fairly normal month for this trade if we were to expire it here. If the market stays calm, I think we'll be able to raise this line maybe to $5,000 and actually, have a decent month here. So far, it's been extremely easy. We'll see if it continues to do so. If we go to our M3 trade for August, I did perform a few adjustments to this. Let's go back to Monday, because Monday's when we did that, and we'll go back to Monday morning. We were sitting in this position here. It was up about $1,000. We had 10 short, 10 tens, 10 long, 960s, 4 short, 1040s, 2 short, 1060s, 6 long, 1070s, and 1 long, 1020. With the up move, we started pushing more delta than what I'd like. I don't like to be too far towards the edge of the 10 here in low volatility environments this close to expiration. So I did make a bit of an adjustment. And one of the things with this is, like I said, I'm trading this with capital of less than $50,000 in this account. I have 44. Any further adjustments are going to require me to pick some capital up somewhere so that I can adjust this out. So what I ended up doing is rolling these long 960s to 970 to bring some money into the account. And from there, I did 2 broken wing butterflies to roll these shorts out. And if you take a look at the T-log, the 2 broken wing butterflies were 1040, 1070, 1080s. And if we take a look at the analyzed graph as of Friday, the position is up almost $2,000. Our delta is about minus 46. And if you take a look at the position, this is what we have. We can take a down move a little bit better than we can take an up move at this point. If we're not going to hit our price target of $5,000, we may hit $2,500 to $3,000, depending on what the market does. It may force me to push this out further. If it does, we're probably looking at closer to the 2,000 or 3 to 5% range, and we may get to 5 to 7% if the market really cooperates. We'll see what happens. I mean, we would need a drop in the market here and not have it to touch anything. If we have been getting at least one harsh move into expiration week, depending on which direction it goes and how the extent of that, we may end up adjusting this again or just pulling it off. But this looks like it's going to be a decent trade this month, as long as this week is relatively calm. If we take a look at our August rock trade, this trade is currently up about $11,000, which is a little over its 20% profit target. We're sitting here in 1030 and 1070 butterflies. If Monday's a calm day, this will be up even significantly more. Have a good chance of getting a really decent profit out of this month if the market remains calm. The adjustments for the week were simply to pull off some vertical spreads. If you remember, we had some 1040, I believe 1080 vertical spreads in here, bullish vertical spreads. Let's go back and take a look. Here we are on Monday, and we have our two 1040, 1080 vertical spreads, and this is what the position looked like back then. When the market pulled down, we started exceeding our maximum delta. We just pulled those two vertical spreads off, and we're currently in the position we were showing you before. If you want to take a look at our T-log, here's what we look like as of this time. And this is just pulling those vertical spreads off. Pulled some of them on. This was last week, and we pulled some more of them this week as the market kind of leveled out. So, or actually, I'm sorry. Actually, we put them on last week. We pulled them off this week as the market leveled out, started to come back down again. So that's that position. Like I said, as long as the market's relatively calm, we'll pull out a very, very good profit. If the market really starts to act up, we may end up pulling a $7,500 gain here, but that really shouldn't get any worse than that. Either way, a good month. And I believe that's all we have going on for August. If we take a look at the last trade we have on, that would be the September Bearish Butterfly, which did get an adjustment on Monday. And that adjustment was simply to add in the 1060s because we were clearly over 1060 at the close. We come back to our T-log. That was put on very late in the day on Monday when it appeared that we're going to close high. And as of right now, that's up about $2,060. Here's what the current position looks like. It really looks beautiful. So as for right now, things are going very, very well with the open trades. We're continuing to expect sideways movements in the market. If we do happen to get that shot during expiration week in one direction or the other, we'll probably pull the August trades and just adjust and go along with the September positions. So that's it for now, and have a great week, everybody. Good night.